How do interest rates impact the multifamily real estate market in Ontario? And what does the Bank of Canada's latest decision mean for investors? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In recent news, the Bank of Canada has decided to hold its overnight lending rate steady at 2.75%, a move that has left some real estate professionals hoping for further cuts. This decision follows a pause in rate cuts that began in April after a year of reductions. The central bank has already slashed its rate by 225 basis points, a significant adjustment matched only by the Bank of New Zealand among developed nations, according to the Bank of Montreal. Some Canadian real estate executives have expressed disappointment, noting that a reduction by another quarter point could have bolstered consumer confidence. Christopher Wine, Chief Operating Officer of Burlington, Ontario-based multifamily company Equiton, mentioned in an interview with CoStar News that confidence in the Canadian economy has reached a low point. The backdrop to this decision includes U.S. President Donald Trump's threats to increase tariffs on Canadian steel and aluminum, which poses a potential challenge to Canada's economy. As the largest supplier of these metals to the United States, Canada could see an adverse economic impact from such tariffs. Despite the disappointment among some in the industry, the Bank of Canada has left the door open for potential rate cuts later this year. Economists and money markets are still anticipating at least 2 more rate cuts by the end of the year, as noted by Marcus and Millichap. Such cuts could lower borrowing costs for commercial real estate investors, particularly benefiting those with variable rate mortgages and developers using shorter-term financing. The Toronto Regional Real Estate Board reported a decline in average sales prices and the number of sales, indicating a cooling housing market. This trend reflects broader economic uncertainties, including inflation and global trade tensions. Phil Soper, president and CEO of Royal LePage, highlighted the importance of upcoming rate announcements in maintaining economic stability amid these challenges. Jordan Kemp, vice president of development at Greywood Developments, pointed out that while a rate cut could have supported the property market, the multitude of global uncertainties still impacts investor decisions. He emphasized that the path to loosening monetary policy is underway, but other factors continue to drive market dynamics. As always, it's crucial for investors to stay informed and consider the broader economic context when making real estate decisions. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.